from there, I'm going to turn it over and introduce Keith Whyte, again, the Executive Director of the National Council on Problem Gambling, a good friend. And gosh, he and I have both started in this field about the same time in 1998. I think we were like a week and a half apart when we started. So we've come a long way since then, and we've seen a lot of things, and really excited to have this session on cryptocurrency and day trading and all the types of things that are breaking in as maybe not new to us, but new to society in terms of how they relate to gambling. So Keith, Dan, James, welcome. Take it away.
Thanks very much, Maureen. And good morning to everybody out there on the West Coast. From Dan and I on the East Coast, and James in the middle of the country. But we're really glad to be here with you today. I think this is an important issue. It's one that I certainly have learned a lot more about in preparing for this presentation, because I'm joined by really two experts. In James and Dan. I am going to serve as kind of a moderator panelist, and probably I'll do a little bit more moderating because again, James and Dan are much more well-versed in some of this than I. So I don't know, I think you already have bios in your materials. But just real quickly, let's let Dan and James introduce themselves. Again, my name is Keith Whyte. I'm the Executive Director of the National Council, as Maureen said, since 1998. And that's enough about me. Danny, tell them about yourself.
Okay, great. Thanks, Keith. And got the video on, so thank you for helping with that, Maureen. I believe you were helpful in that. My name is Dan Trolaro, and as I said in the chat, it is chilly out here in New Jersey. We're in the 70s, and now we're back down to about 8 degrees this morning, and it's warming up to 21. The wind has been brutal, but that doesn't matter. It's a sunny day outside, and we changed the clocks this weekend. So I am the Assistant Executive Director for the New Jersey Council on Compulsive Gambling, owner and operator of the 800 Gambler Helpline, and I am just privileged and thankful to Maureen and everyone else who made this possible to talk about a really great new emerging topic. And as one of the co-chairs for the Emerging Trends Subcommittee for National, this is something that we need to focus on, both in terms of day trading and also on the other side, the cryptocurrency side, which I'm looking forward to learning a lot more about today. I have a basic understanding, but I'm sure James is really going to drill it home for us a little bit more. So with that, I'll turn it over to James Syphax in Ohio.
Yeah, thank you both. I am James Syphax. I am a community prevention manager at Prevention Action Alliance. We're the state level prevention provider here in Ohio for not just gambling, but also substance use and other behavioral health related topics. I am with Dan, a member of the Emerging Trends Subcommittee, and I'm also proudly a board member for our state affiliate to the National Council of the Problem Gambling Network of Ohio. So like Dan, it was 70 degrees here last week. I wore shorts. Once I wear shorts, I hate to go back to long pants. But it is 30 degrees right now here in Ohio. So hearing Dan's temperatures, I can't complain.
That's right. No, so I will pop up the presentation on our screen, and so we can get going. But as Maureen said, we very much hope that this will be an interactive presentation and discussion. So at any point, please use the chat feature on your right, I believe, and I'll be monitoring the chat as well. I'm going to hopefully let James and Dan do most of the talking, and but that's going to be hard. So James and Dan, you guys have to remind me that, Keith, you're not going to talk for 2 hours, as I would be want to do. But so we'll take you all through this. Anytime if you have questions, please use the chat tab. And then, we split this into 3 sections, as we'll show you. And so at the end of each section, we'll try and pause If there's something particularly interesting, you know, we may break, but generally we'll try and kind of do the Q&A at the end of each section. And again, you know, send us your comments, send us your questions. This is really for you. You know, we can hear ourselves talk all the time, but so we'd like to hear some of these other voices as well. So day trading, cryptocurrency, problem gambling in the 21st century. Let's get it going. So, of course, one of the reasons that the three of us are here is because the gambling field has enormous similarities, we believe, with trading, investing, and with some of the discussions around cryptocurrency. But there are some differences. And what we'd like to do is kind of take you through and highlight, especially some of the discussion around the distinctions between gambling and investing and trading. You know, some of these things are seen as social goods. Other these things are sort of stigmatized or not seen as productive. You know, that there's some famous discussions about gambling is not really even economic activity at all. It's just unproductive, you know, exchange of money. But investing is building a company, and so that's good. And gambling's bad, and that's existed all through our history. So we'll kind of look at that, and especially, obviously, we'll look at some of the psychological or clinical perspectives and experiences. You know, motivation to trade and gamble. How does it make you feel? What are the consequences? You know, why are you still doing it, even if you are losing considerable amounts of money? Things, again, that are very familiar to us in the gambling field. We're going to spend a lot more time on the trading side and the crypto side because we thought that was probably going to be least familiar to those of you on this webinar. So again, this is not a problem gambling 101. It's not a basic. You know, we're not going to spend a whole lot of time on, you know, the sort of fundamental characteristics of gambling addiction. But rather, we're going to assume that you've got a decent level of knowledge, and we're going to refer a lot to, I guess, some of the things that are similar and different in gambling and trading. Then, you know, section 2, we're going to look at some first-person or you know, stories of experiences and perspectives that both Dan and James are going to cover, and then in the end, we're going to wrap up. We're going to talk about some of the particular impacts of COVID in this day and time. You know, we'll certainly reference Robinhood. You know, there's a lot that we'll talk about that's current and now as these issues come together. So with that, let's look at some of the legal and historical perspectives, definitions, observations, you know, similarities and differences, and then we'll get into some of the regulations and restrictions. And so one of the, just as a base as we get started, one of the things I think that's most interesting about this issue is the different ways Americans view or tend to view gambling and trading. And so, as we all know, gambling has often been prohibited unless a specific form is legalized for a particular age group in a specific jurisdiction. So it is very much gambling under English common law and under most US state law is prohibited unless it's legalized. And that puts it in a class of activities that have very few parallels: alcohol, tobacco, you know, firearms, and things like that. Almost every other thing that you can do in the United States is legal unless it's not. And so just always keep that in the back of your mind. You know, gambling is a privilege. It's not a right. It's not clear where trading is. Trading has in colonial America and mid-century America, trading was often prohibited as well. It was seen as speculation. It was really seen as gambling. And obviously, and we talked about this a little bit, showing some videos, and we decided not to due to the technical challenges. But if you listen to some of the people behind Robinhood, and I was thinking this morning about the classic 80s comedy Trading Places. James and Dan, I'm probably dating myself a little bit, but if you're familiar with Trading Places, where Eddie Murphy is being told for the first time about the stock market by the two brothers, and then they go through how you make the prices and how you make the risk and stuff, and he says, "Oh, you're a bunch of bookies," and Mortimer turns to the other guy and says, "Yeah, he gets it." It was I thought that would be a fun video to show as well. But in many times, I guess it is important to say, in many times in our history, stocks and especially futures and options trading were banned, and because they were seen as gambling, you know, because it was seen as unproductive speculation. It was seen as people that were trading off the hard work of the farmers and manufacturers that stocks were seen as kind of an ethereal thing. They weren't really tied to the underlying value of a company. And there was a long recognition throughout our history and throughout the history of many European nations. There was the Dutch tulip mania craze and other speculative booms and busts where, stocks were essentially seen as just another form of gambling. And if gambling was banned, probably so too was stock trading. There's a long time when stock jobbers were seen with the same kind of disdain that you would have as for your track bookie. And the bucket shop was really, if you think about The Sting, the movie The Sting, and how they were sort of underground, these bucket shops were kind of half den and half, it looked nothing like the floor of the New York Stock Exchange back then. But so while the views of gambling and trading have waxed and waned through our history, where we are right now is that it is basically legal for those 18 years and older. And as we'll talk about a little bit, children are being encouraged to invest, in this virtuous good of the stock market to prepare themselves for later lives. You can get a custodial account, and there are apps now that are being marketed and tailored to very young children. Unlike in gambling, though, there are often, and this is a possible protective factor, if you will, there are often requirements for certain types of trading, and Dan is gonna get us into this, when we start to look at the historical perspective. So Dan, tell us a little bit about, as we've seen these booms and busts in our history.
Yeah, great. Thanks, Keith. And thank you for setting it up kind of that way. When we talk about a historical perspective, I first want to add in, a little bit about my background, which I didn't cover too much in the bio, but the reason I'm particularly interested in this topic, I spent my life, I was a finance major and economics minor. And so I went to school. I loved investing. I loved trading. I was always very interested. Started at an early age with some mutual funds with Vanguard, one of the no-load fund companies where you could buy a collection of stocks, which is called a mutual fund. And that's how I started investing. It was just, I earned a little bit of money. I had a custodial account. As I got older, I had my own accounts. And it was something I was always interested in, to the extent that when I graduated college in 1998 from the Trenton State College in New Jersey, I was offered an opportunity with one of the premier investment banks in the world, Goldman Sachs. And so I started my career in 1998 down in Wall Street, down in lower Manhattan, and things were going great. A great opportunity, great job. I was a part of a team that developed their web trading platform when online trading really started to take off in the late 90s, early 2000s. And I was in charge of risk management. We had to mitigate risk and harm on the firm's books. We had to make sure that if we had investors who were quote unquote speculating, okay, and we're going to talk about that today, if they were speculating on stocks, we had to protect the firm's risk, because oftentimes in the investment world, you can borrow money to invest in the stock market. That's called buying on margin. And we'll talk about that today. And if you're borrowing money and the stock market goes south, like it did in October 19th of 1987, Black Monday, when the stock market dropped 22% in a single day, you can be left really with a big problem, both as the investor, but also as the institution that loaned the money. So I always was fascinated by this world. And, part of the journey for myself was that I was unfortunately downtown on September 11th, 2001, when we had the attacks on New York City and the Trade Center coming up on 20 years ago this year. And I lost a lot of friends, and it was really hard to stay in that work environment. It was hard to continue doing the work that I did. And so I waited another 2 years. I left the city, but the lingering effects of September 11th really stayed with me. For myself, it actually led to myself going down a pathway which involved gambling, which is why I'm so fascinated in making the connection between gambling and day trading, gambling and investing. It's why I have the privilege of doing the work that I do, because the day of my last bet was February 11th, 2010. So over 11 years. And it was a function of a lot of things, but I'm really amazed at the growth of investing, trading apps, and more of the behavioral similarities, as Keith was talking about. This is not a gambling basics 101 course. So we're going to assume that there's some fundamental groundwork that has been laid, but we're going to try to hopefully help you understand some of the concerns that we see as professionals in the area, so that you can take this information back and maybe think about it a little differently. So that's just a little bit of historical perspective from my point of view as to why I'm coming to you today with some knowledge and background on this, but also why it's also very important in the gambling world that we consider this topic. When we look historically, prior to 1987, in New Jersey, helpline calls to 800 Gambler for stock market trading represented only about 2% of calls. You know, if we think about investing, stock market trading, technically it's not gambling under regulatory definition, right? It's regulated by the Securities and Exchange Commission. It's regulated by FINRA, the New York Stock Exchange. Those are not gambling governing agencies. Okay, so today we have to be very careful. We're going to be talking about things that are technically not considered gambling from a regulatory perspective, but behaviorally, cognitively, right, emotionally, we have to understand there's a difference. Because just because something's not technically considered gambling, fantasy sports, it doesn't mean that you can't get the same behaviors or feelings when you're participating in this activity. So we want to be very careful. In the weeks that followed the stock market crash in 1987, stock market related calls represented 44% of our helpline calls. So there clearly was, people had lost a lot of money and they didn't know who to call for help. And it could have been the gambler themselves or the loved one saying, hey, I took a chance in the market. I speculated. That's a word you often hear with investing or day trading or in the stock market, is the term speculation, right? Not doing much research, kind of throwing a dart at the wall and hoping for the best. So our helpline calls spiked. Even Dr. Robert Custer, a pioneer in the field of gambling, testified in New Jersey before the Governor's Advisory Commission that stock market gamblers represented 20% of gamblers that he had diagnosed. So there was something going on in similarities between those who like to gamble and those who were playing the stock market. Keith?
And James, I wanted to just real quick ask you about how another prevention expert, how youth perceive some of these different types of risk taking.
You know, I think, pardon me, and I'll qualify some of my background. I spent years as a school-based prevention specialist, working with several of the, actually one of my schools was the largest high school in the state of Ohio, providing school-based prevention services and other types of behavioral health. I'm also a chemical dependency counselor, so several types of behavioral health services for youth. You know, as part of our state campaign, our state problem gambling prevention campaign, we also did a lot of focus groups with youth around the state, with youth and parents, and we were kind of looking at that, how parents viewed youth behavior and how youth viewed youth behavior. And as you may not be shocked, they were different. And what we heard from the youth is that they are well aware that these things are gambling. There is no, you know, parents wouldn't expect, you know, their middle and high school students to know what day trading is, to know what, you know, trading cryptocurrency and crypto platforms are. Not only are they aware of them, but they are well aware that they are gambling behaviors. And they do it as a type of, almost a point of personal pride, that, you know, everyone knows that, hey, you know, Billy made, you know, $500 last week. You know, it's moved beyond the bragging about fantasy sports, which they're still certainly engaged in. But who can, you know, as you kind of see online, and I think they've adopted the old kind of Wall Street slang of, you know, having either diamond hands or paper hands. And those are very much youth terms now. You know, that they will mock each other over not being able to hold on to something for a long-term hold. So it's very well incorporated into our youth culture and what they know and don't know, and how they use it to, again, as that point of personal pride over who's able to do what.
Well, and I thought one of the things as we put this PowerPoint together that I thought was so interesting about this slide, and Dan, James, if you guys can talk to this, you know, I look at this types of investment chart, which I never really learned when I was a kid, or frankly, as an adult. You know, I just stuck my stuff in a mutual fund and just let it, you know. But you could make a similar type of chart in looking at that risk level increasing for types of gambling. and so we look at things like speed of play and size of bet and all that. But, I think there's probably a similar pyramid here in gambling. But Dan, you were the one that brought this to us. I thought it was so interesting. When we look at trading, do people understand that there's this accumulation of risk, or that risk varies?
Oftentimes they don't, Keith, and I thought of this too in the world of, even if you think about sports betting, right? Like, when you look at in this diagram, if you were to go upward, you have a more risky investment, right? Mm-hmm. So increasing risk of loss of principal, but also with the risk comes the reward, right? So as you take on an incremental unit of risk, you also have an incremental unit of reward. And in the world of sports betting, that's the parlays, that's the round robins, that's combining multiple bets, where if you get one right, you're winning back, 90% minus the VIG of your bet. If you could parlay two and get both of them right, now maybe you're at 2.4 times. You get three of them right, you're at 5 times. So the bigger the risk, the bigger the reward. With the world of investing, though, if you look at this chart, essentially most investors, and I want to use the word investors, an investor, someone who takes a position and buys and holds for the long term, they're familiar with the common stocks, the mutual funds, the very basics, right? Maybe treasury securities like government bonds, T-bills, notes, et cetera. But what's interesting is there's investments within this chart that are emerging or that we don't think about. One area that's fascinating that it comes under a lot of scrutiny are viatical settlements within the life insurance industry. A viatical settlement, for anyone who's not familiar, is if you have a life insurance policy, and it has to be a whole life policy that accumulates cash value, you can sell that life insurance policy to a third-party investor. So now that investor buys a life insurance policy and is now basically waiting for the insured to die. And then that investor receives the death benefit. And they're paying some type of discounted present value, right? You're paying something above the cash value, but something less than the face value of the policy. And this is a market that comes with a lot of ethical scrutiny, if you will, because essentially the investor's hoping the person dies as soon as possible to maximize the return on their investment. That is embedded within, when you look at these different types of investments, even something, I don't know, James, if you want to talk about, when we talk about gold and collectibles, one area of collectible besides cryptocurrency has been these non-fungible tokens, these NFTs.
NFTs, baby.
Yeah. Which has really been taking off. James, do you want to talk about that a moment?
Well, yeah, two things real quick on viatical settlements. There's also a parallel market in big lottery jackpots or big jackpots. So there are at least 2 specialty companies that will come and say, hey, if you've won this huge life-changing jackpot, especially when it's the state structures it to pay out a certain amount a year, you can go and get a cash value payout now to get all your money in a lump sum at a hugely discounted, terribly discounted premium. Yes. And then the settlement company will go out. And the second thing is that, again, it's only recently in our history that these types of settlements have been permissible, because they're called negative value life insurance contracts in general, which is basically sort of wagering on when someone's going to die, and especially settlements around life insurance contracts for the longest time in American history were prohibited, because it was seen as a encouraging negative behavior. And you might make that same parallel to certain types of negative sports bets. Is a athlete not going to perform? Is someone not going to beat the spread? Anyway, there's, as Dan said, there's some fascinating sort of ethical, if you will, and policy implications around these types of speculation, especially on negative outcomes. Sorry, James, please, crypto, because that's also NFTs, such a crazy. I don't know where would you put this on the chart? Is it like the tip of the tip of the tip of this pyramid, or is it?
So maybe not. I saw the golden collectibles because precious metals is something that has become more popular with the same crowd that was really pushing the GameStop and the Wall Street Bets group kind of veered into precious metals. But I noted that it says gold and collectibles, and I immediately started thinking of NFTs, which Dan and Keith and I made this presentation a week ago, and NFTs were much less on my radar than they are today. So I did want to talk about those. I am just curious, can I see in the chat from our attendees, who has heard of NFTs?
Yeah, that's a great question. Let us look. So if you've heard of NFTs, just wave your hand, shout us a shout. I'm not sure that's even English, but use the chat window to indicate somehow to your confused moderator that
Lisa has in North Dakota. Yep, excellent.
There we go. Thank you, Lisa. Yeah, this was, I mean, literally preparing this stuff. It was like, well, okay, what's all the crazy stuff that's happened today? That we should change the PowerPoint, much less last week, much less,
I've got some slides with value of a few of the more popular cryptos on there, and we can just disregard those. I'll give you today's numbers when we get to them.
Yeah, there you go. So it looks like the majority don't seem to have heard of NFTs,
so
which is not surprising. Yeah.
NFTs are non-fungible tokens, and the first thing I had to do is look at the word fungible. So it's a kind of an investing term. And I think the easiest way to give this definition, $1 US is the same as another US dollar. So those would be considered fungible goods. 1 Bitcoin is the same as another Bitcoin. My dog, even though my dog is I have a Yorkie poo. You could give me another black Yorkie poo, but they would not be the same. So those would be non-fungible dogs. Another great example I saw in some YouTube videos were airline tickets. You can have a ticket on the same plane, but based on your personal preference for an aisle seat or a window seat or a middle seat, those tickets on the same plane, front of the plane, back of the plane, those would technically be considered non-fungible because they are not identical. They do not hold the same value based on your preferences as the possessor. So non-fungible goods are kind of in talking about the crypto sense. Yes, correct, Maureen, thank you. Non-fungible means not mutually interchangeable. These NFTs, non-fungible tokens, they use the same blockchain technology that we see with a lot of crypto. So it's a decentralized possession. When we talk about possession of of intellectual property, there's usually a governing body that monitors that for us. We've decentralized cryptocurrency from banks. We've decentralized gambling from casinos. We have decentralized now ownership of these intellectual or artistic properties. I think some examples, Lindsay Lohan, as you may know from Herbie, the Herbie movie, and that may tell you a little bit about the market that is behind driving these things. But Lindsay Lohan is a big supporter of Bitcoin, and over the last week has done a lot of tweeting about cryptocurrency and these NFTs. She has sold several NFTs for around $40,000-$50,000. The most expensive work of art went for around $60 million, I believe.
Yeah.
It is a work of art called Beeple. So basically, these non-fungible goods, something that has nothing else like it in the world. The rights are being sold online to these one-of-a-kind, I'll use the term loosely, works of art. Everyone is probably familiar with Grumpy Cat, the Grumpy Cat meme. The original photo of Grumpy Cat that became the meme, the digital rights to that photograph sold for $80,000. And that's really all these NFTs are. They're digital rights to digital assets that have nothing, there is no equivalent, nothing that can be mutually interchangeable. There's only one picture of Grumpy Cat, one original photo of Grumpy Cat. There's only one original tweet. Jack Dorsey, the founder of Twitter, is selling, and right now the bid is $2.5 million. He is selling the digital rights to his tweet, the very first tweet ever on Twitter. Right now it's going for $2.5 million. So it is a market largely driven by cryptocurrency, but it is basically a digital asset that you own.
And it's interesting. Sorry, James.
No, I was just going to say it's going hand in hand with the crypto market, and the speculation is that for those of us that do talk about gaming, is that game assets, so be it a custom skin, a custom weapon, a custom map that you've created. You know, if you, I saw SimCity was a great example, maybe a little dated example. But if I create a city, a custom city in SimCity, I can sell that as a virtual asset, one of a kind, something that I have made, and I can transfer that digital ownership to someone in the form of an NFT.
Yeah. And while this seems, I think, probably for some of us very, very abstract, just think that for a long time, the value of money has not been tied to necessarily the amount of gold that we hold in Fort Knox. You know, the money now, you know, the value of the US dollar rises and falls, right? And it's based on perception. It's based on what people are willing to pay for it. And so just like that, you know, but now you can separate things completely from a physical, you know, the physical bullion. We'll cycle back to some of these themes, especially the impact of technology on things. You know, you didn't have NFTs 10 years ago because you didn't have blockchain, and you certainly didn't have it 50 years ago. But for a long time, we've been increasingly divorcing, you know, the physical from the digital. And I think what you're seeing now today, this week, is the latest expression of that, and probably the biggest expression of that. And it has implications, obviously, for counselors. It has implications for policymakers. It has implications for us in the gambling space. And one of the things that I think we'll be talking about later on is that the gambling field may well offer some ways of dealing with some of this new crypto and trading, because I think in the regulated gambling space, we've had a lot of experience in helping minimize risk. We've had a lot of experience about things like self-exclusion and limit setting, which are often not found built into some of these other products or techniques. So I think so again, there's a dynamic exchange. But when we go back and when we start looking at again, when we go back to this sort of understanding risk and types of investments, Dan put together a couple of these slides, so I wanted to kind of take us through this pretty briefly. As we look at, and you touched on it earlier, Dan, but if you can come back to that, and I know we've got the slide right after this. What's the difference between an investor, and a I think speculator you called it,
Great question, because I think for someone who invests, they take into consideration the items that are on this slide. They understand the various risks that are involved. When someone is making an investment, they understand that sometimes interest rate can impact how their investment performs. They understand the political climate, company risk, market risk, right? The purchasing power risk. So they kind of take an assessment of risk, right? A good risk manager tries to understand. We can never predict all of the risk, but we do the best we can to try to mitigate harm minimization, right? Risk reduction, to try to make or construct a portfolio or an investment that takes into account various aspects or elements. You want to go to the next one as well, Keith?
Yeah.
And so when we talk about trading, right? Because today we really want to really take a look at what is this connection or concern? What are some of the behaviors perhaps that we might see intertwined between gambling and the stock market? And let's just focus on the two most common trading definitions. You either have a position trader or a day trader. A position trader is your buy and hold investor. That's your Warren Buffetts of the world who say, buy this, hold on to it for 10, 20, 30 years, right? Because historically, over long periods of time, the stock market generally tends to go up over long periods of time. So if you take a long view, you have a higher likelihood of having a positive return, a positive expected return. However, a day trader is someone, an individual, who will start the day buying a stock or selling a stock, depends, and then they will close that position out by the time 4 p.m. hits at the close of the trading day. the mantra for a day trader is never end the day with any stocks in your possession. You don't want to own anything at the close of business. Whatever you did during the day, close everything out. And what the day trader tries to do is they are constantly preoccupied. They're following the market. And if there's the slightest move in any direction, they might be making another transaction. A day trader can make hundreds of trades in the course of a day. And when I think about the two most common trading definitions and I look at day trading, here's a little connection. When I look at the expansion of sports betting across the United States, while technology has allowed for day trading to become more normalized, technology has also allowed for in-play sports betting to become more normalized. And for those who may not be familiar from the gambling side, sports betting in play means that you can make multiple wagers on a sporting event within that event. So you can make hundreds of bets on a football game, on a basketball game, whatever it might be, similar to how a day trader can make hundreds of transactions or trades during the course of the market day. Their window is 9:30 to 4, essentially, okay? A football game might be 3 hours. Your window's a little shorter, but you can both make similar micro transactions, right? And we start seeing that. So take a look at those as the two most common trading definitions, and we're starting to kind of put it together, the similarity with some forms of gambling. Keith?
And I do think what you're seeing now with in-play betting, just real quickly, is that you can bet maybe on a dozen events within a quarter, or within a series even of plays. But what you're going to see now, and what we're seeing in the UK, is basically anything that can be measured within the course of a game or an athlete's performance can be bet upon. And I think when you look at the next generation of wearables, in terms of the tracking that the players have, you might well soon be able to bet on how fast James is going to run down the field on any particular play. That they'll be able to, that we'll have enough processing power to crunch, his average times over the past several games. And so for this game, whether or not, there's going to be an over-under on how fast James runs on this down or on that down, or whether or not 100 to 1 he'll catch a ball within this play. There can be almost an infinite number of bettable events within each athlete's performance, on each play, in each series, on each game, in every sport. That's really where the data is going. Golf is a great example. The PGA Tour shot tracking system, you can bet on how the club head speed, you can bet on the length of the drive, the arc of the drive, you can bet on, and that's on every single hole. I mean, every single
there's so much
swing.
data out there, right?
Yeah.
There's so much data and there's so much content available. Something I just added in the chat is that, that protective factor of time has been removed, right? Because of that digital reinforcement, that digital dopamine drip. You're getting that reinforcement so much more frequently, and there's so much preoccupation, Keith. Like you said, there's so much data to mine through. I mean, it's amazing the amount of information we have at our fingertips.
Yeah, and so anything that can be monitored and measured will be monetized. That's my mantra when it comes to in-play sports betting. But it has a lot of similarities to when you look at traders. They're constantly in quest of information, right? They're trying to decide, the risks for these various stocks or propositions, and they often, while they may think long term, they're placing bets on the very, very, very short term. And again, that's a hyper focused thing as well. So I don't know if you want to talk about these different types of strategies or move on to the next.
Yeah, because what I did is I took the trading strategies and even broke down day trading a little bit more. So, position trading, that's your long-term buy and hold. Peter Lynch theory of buy what you know, invest in what you believe in, invest in what you use, long-term view, right? Weeks, months, or years. And what I'm showing here is that impact of time as a protective factor. Yeah. Scalping is the shortest, quickest form of trading. You're talking seconds or minutes. Buy, boom, sell, boom. That's just scalping, which is a shortened form of day trading, which happens during the course of a day. Don't hold positions overnight. And then swing trading is normally more of a shorter than long-term position, but you might hold a position for several days or weeks. So there's these various types of trading that go on. The most concerning, obviously, would be the ones where the rapid reinforcement, the first two, scalping and day trading.
Yeah. And I know, and James, I don't know if you want to talk about this as well. I've met a legion of poker players and sports bettors, from kids to adults, who see themselves as investors. Who see that they've, whether they've studied the next card or they've studied the blades of grass on the track. Blah blah blah. I mean, you do see many people, and not many people kind of go into gambling to have fun, but there are people that take these sorts of approaches to their gambling as well.
Yeah, one of the first things I thought of, there's a very popular game in crypto casinos online, and it's literally a rocket ship, and you'll place your wager. The rocket ship will take off, and as it travels upwards, the multiplier for your bet will increase. And there are people and you'll see this a lot on social media, and we'll talk about this a little more in the crypto section, how this type of gambling is being used to gain social media presence, to build a presence, build followers, to kind of reach that influencer status. And there are really two distinct types of play. There are the people that immediately will cash out, and they'll spend because at some point the rocket ship explodes. And if you don't cash out before the ship explodes, you lose your money. So there are people that will, the ship will launch, and immediately at 0.05 multiplier, they'll cash out, and they might only make $1.50, depending on how much money they have wagered, but they'll do that all day. They'll make $1 a time, and they will do that for 12 hours.
Just grinding that out, grinding it. Yeah.
And then there are the people that just let it ride. I'm going to cash out at 20 times, no matter what. And that if I lose, I lose. If I win, I win. They're in it for, some short, quick wins. So there really are, the same types of strategies being implemented across the board.
Yeah. So, as we sort of look at some of this stuff, again, we'll talk a lot about technology. In fact, this is basically all about technology in some ways. The access, the accessibility, the action, is just ever increasing. And it is, I think it's fair to say, never before in human history have we had this much information, this much access, this much action, delivered right to our mobile phones. And I'm not sure that we're prepared for it as a society. I'm not sure that our brains are prepared to really analyze it's just such a complex risk profile in the 5 seconds between when this trade is available and when you've got to close it out, or when when the ball is snapped and the 25 seconds until the play is over. We're making just these incredibly complex decisions, whether it's gambling or trading. And then, of course, there's, we talk a lot about how people perceive and why they gamble. Is it seen as a socially good? Is it wealth building activity? Are you a hedge fund manager? Or are you a degenerate gambler? And there's perhaps not as much distinction between those two as folks on Wall Street would like. And then motivations, we'll definitely get to that, how and why you're doing your activity.
Keith, can I add, just to build on that, I think back to when I was in the midst of both the gambling and the day trading back in 2008. And I remember I had a CPA doing my taxes. And I would be happy to share with him the pages and pages of trades from my day trading account. And he would look and say, wow, it looks like you're doing so well. These were some good trades, right? Great job. But I would be embarrassed to show him my pages and pages of gambling losses. And you think about the stigma, right? Because when someone's a day trader, it's like, wow, you're doing so well. But when someone gambles with the same amount of velocity and tenacity and time, you have a problem. But we don't say the same potentially with the day trader. So there is a stigma.
Yeah, the language is different, and the language is very deliberately different.
Talking about that stigma, I think we see the same with crypto, because it's the young, smart, you're technologically savvy. Yeah. I think the best example is there are several car dealerships now that will let you buy a car with crypto. And they're independent dealerships, but Lamborghini There are a few Lamborghini and Ferrari dealerships, a couple of BMW dealerships that will let you pay for you can walk in and buy a Lamborghini with Bitcoin.
Yeah. High end.
Yes, no one is buying a Chevy Cruze with Bitcoin.
That's right.
It's a lifestyle.
Yeah, and it's very interesting. We'll get to this. And again, please remember for the attendees, if there's any of these terms, concepts that we've mentioned that you would like some more information on, or you're not as familiar with, any observations you have based on this discussion, please use the chat window. Let us know, and we look forward to hearing from you. So Dan, similarities and differences, especially again through the lens of trading, is compared to gambling. And the Kelly criterion is that's all. It's a great one.
Yeah, and so we think about this criterion, this measurement tool, if you will, called the Kelly criterion, that was always applying in the investment world. But then you had sports bettors and the gambling world started to say, hold on, we might be able to use this system as well, because it comes back a lot to money management, right? And it was horse bettors trying to manage their money, financial management. You don't spend, if you go to the horse track with $100, you're not going to spend $100 on that particular horse in the first race, because if you lose, you have nothing left the rest of the day. So there's a lot of, I would say a lot of advertisement, a lot of websites where they promote money management. And Keith, in the past week since we put this together, we're doing some work at a university in New Jersey, Seton Hall University in New Jersey, and we're doing some studies around college-age kids, 18 to 25, perception of sports betting. And we received our first results from the qualitative piece this week, which is great timing before today.
Yeah.
And in 18 of the 25 cases for qualitative, the youth, 18 to 25, do not see sports betting as gambling. They see it as a way to make easy money. They see it as a way to pay bills, a way to make ends meet. They say as long as they just manage their money properly, they never lose. So they say it's almost a gimme. 3 kids out of 25 said it's a gimme, Gimme, right? Yeah. So all of a sudden, when you look at marketing, because marketing matters, when we look at how it's marketed and a way, even for in-play sports betting with early cash out, if I make a bet that's not going my way, I can choose to close that bet out early, and now I'm going to redeploy those funds somewhere else.
Yeah.
So you start looking at almost the game. It reminds me of the game Deal or No Deal with Howie Mandel. Right? The whole goal of Deal or No Deal was to leave the big cases on the board so the banker would give you an offer based on the discounted present value of what cases were left. And that's the same concept that we see with early cash out from sports betting, in-play wagering, is that you can get an offer to close out your bet early. And most people view that as skillful money management. They're allocating their resources, they're focusing on money management, and that can start to create some cognitive distortions in the gambler's mind, because they might think that they're better at this than someone else.
Yeah.
And it moves it from gambling to money management. And we have to be really careful.
Yeah. So when we, when we think about definitional issues, gambling, risking something of value, there's prize, chance, and consideration. That's not too far from the definition of day trading, risking something of value in hopes of gaining a value when there's speculation involved. And again, there's been this dance throughout our nation's history in the courts, in Congress, in state legislatures, trying to really distinguish if there's a line or where that line is between gambling, which is bad, and investing, which is good. So we, sorry, go ahead. Please, yeah. So we were going to, we talked a little bit about zeroing in on day trading a bit, and the similarities and differences with day trading and gambling. And really, quite frankly, I don't see. I think it's almost it's important to think about trying to distinguish the two, because I really can't. I mean, it's being a little bit pithy, but I trying to distinguish day trading and gambling is very difficult to me, as you can see, on these slides. We initially thought about putting a table together, but the table, it was more or less every row was the same. Gambling, can you use an app? Yes. Day trading? Yes. Is it high speed? Yes. I mean, Is there, so maybe I'll ask it this way, James and Dan, how would you distinguish day trading from gambling? If a kid asked you, or if someone asked you.
So when I think about day trading and gambling, if they were to distinguish, first I would talk about how it's regulated, right? So I always go back first to the regulations, but then behaviorally, there's not a heck of a lot of difference, unfortunately, from what we're seeing. From my perspective, having lived in that world and having done it myself, I think about, am I preoccupied, right? Am I constantly focusing on the stock tickers and checking research? You can do that for gambling or for day trading, right? How has your mood changed? Are you still doing your homework? Is it creating problems in your life? Are you now borrowing money, right? The rush you get from day trading, the adrenaline rush, the dopamine drip from the constant blinking lights can be very similar to the gambling. We've even seen during COVID, COVID-19, we've received more phone calls and we're seeing people saying, listen, sports were shut down. So I needed something else to do to my time. I had to escape or I look for action in another way, right? Action or escape. So the stock market's been open. So I started opening up an online account, right? Yeah. And I'm on Reddit. And by the way, we know the name for that thread is called Wall Street Bets. Yeah. The word bets is in the title of the thread. So when you look at speculation and these meme stocks, which we really haven't talked about, but a meme stock is essentially a stock that appeals to millennials. It's a stock where there's been very little research done. Yeah. It's all based on hype. And it's almost like instead of crowdfunding, it's crowd investing. It's getting a whole bunch of people together to pump up a price of a stock in hopes of then cashing out quickly. And that's why we're seeing such volatility. So there's uncertainty.
And at least meme stocks, there is theoretically a fundamental underneath there somehow. James, as you talked about NFTs, that there is a fundamental I don't want to be dismissive of digital assets. There is a fundamental thing that is Jack Dorsey's first ever tweet, but it is pretty far disconnected from, what we traditionally consider as physical value, right? There's value, but it's a lot different.
Yeah, I think in how to talk with youth about this, as a prevention specialist, we know that scare tactics don't work. So we know that just going in and, doing the fast, here's everything that can go wrong, that doesn't work. So we talk about the brain science. And I think that lends itself very well to talk about, as Dan said, the dopamine release. Yeah. And looking at what we know are the risk factors, the rate of play. I did a presentation for our state conference last week, and I did a live, we were talking about Bitcoin, and I went into my PayPal account as part of the presentation, and I bought Bitcoin. And when I bought Bitcoin, it was the first crypto that I had bought through PayPal. I only buy it, I spend $1 on it just to demonstrate how easy it is. I'm not an investor. But literally, lights and sounds confetti shot across my screen, sounds congratulating me. I now am an investor in cryptocurrency. And that I've played a slot machine before. The sounds and the lights and the flash, it felt very, very similar, to elicit that response. So I think that, in talking about the brain science behind it, it's eliciting the same response, but also they're using the same marketing to make that purchase. And we'll talk about, there are, of course, meme cryptocurrencies. Dogecoin is, I think, the most popular right now. I think if we made a Venn diagram of the Wall Street Bets crowd, the meme investor crowd, the crypto crowd, there would not be, we may have pretty close to just a full circle.
Just one big circle. Yeah. Yeah. And so for those of you that weren't following on chat, Maureen asked if a meme stock, a good example of a meme stock, was GameStop. And yes, that was absolutely that. That's a great example. There are others. There have been others. There will be others. It's something that continues to accelerate. Fascinatingly enough, though, I followed the congressional hearing on GameStop, and the discussion around gambling and trading was fascinating. And the tone and tenor of the questions, the defensiveness from GameStop and other folks who were desperate to say this is not gambling because it's not regulated as gambling. I mean, they really tried to. They couldn't talk themselves out of that box. It was gambling. It wasn't gambling because if it was, we wouldn't be able to do this. We couldn't do this under New Jersey Division of Gaming Enforcement regulations, but the SEC thinks it's absolutely fine. That was really the only distinction when it came down to it. It's not gambling because no one's making us say it's gambling, but otherwise, yeah, absolutely it is. So it's. No, sorry.
And Keith, I want to add that I think one of the areas of concern for a young person is that they really don't understand the risk. They don't understand the mechanics. I think about the unfortunate situation of the young man on Robinhood who completed suicide. And you think about what you're doing and how fast the market can move against you, especially when you have what's been going on with technology and advancement and how fast news travels. GameStop has been like up and down. And so just from that example, a young person who doesn't fully understand, who thinks it's just kind of fun, I'll just get out real quick, you blink, you go away for 15 minutes, your whole world can change.
Right. And conversely, or out of that, it encourages that hyper focus, that persistence, that, not being able to walk away because you feel like you're going to miss. It's the same in some ways. You don't want to get up from the slot machine because, it's going to hit, I can't get up because as soon as I get up, that's when it's going to come, that's when it's going to come due. And then, so we talk about, again, the neural pathways and stuff. I just think these things are so similar. And I do think in some ways, perhaps there's more risk around trading because it's less regulated in a sense that it's not regulated, maybe I should say, in the way that we're accustomed to in the gambling field. And I mean, there are state regulatory bodies, there's the SEC and FINRA, as Dan mentioned, but it feels like it's a lot looser. There's a lot less controls around it. And as we said, perhaps that's what the gambling field can help with. There could be some additional controls. There could be some additional protective features built into these trading apps, which, they use a lot of, as James said, they use a lot of the motivational or behavioral marketing techniques from gambling. So why don't we bring some of the what we call responsible gambling or consumer protections in as well. And I think that's an interesting area. So when we talk about regulations and restrictions, Dan, if you want to kind of talk about a little bit, what are some of the regulations around gambling? Sorry, around trading.
Trading, yeah, because we do. It's important to think about how does the investment world, they have to have some things in place, right? So usually each brokerage house will have a risk management division, and their job is to protect not just the risk of the firm, but also the risk of the client as well. And they work in concert with the regulatory agencies, the SEC, FINRA, New York Stock Exchange. So, the SEC even has rules for margin and pattern day trading. Okay, and again, just to level set everyone, margin is borrowing money to purchase securities, essentially. I mean, I'm going to keep that as basic. It can get more complex, but for the essence of this call, when you borrow money to buy something, let's say fundamentally a stock can either go up or down, okay? A stock can go to zero. So now you have no collateral left securing that loan. Think if you own a home and you bought a house and you have a mortgage for $300,000. It's the same thing. You borrow money to purchase a home oftentimes. If the house were to go to zero, you'd be left with a $300,000 mortgage with no assets securing that loan. You're on the hook for $300,000. Same thing with the investment world. The definition of a pattern day trader, so the Securities and Exchange Commission also has identified a pattern day trader where if you're executing 4 or more trades within 5 business days, it's a very low criteria, you're considered a pattern day trader. And a lot of the brokerage houses, the large brokerage houses, will require $25,000 in your account in equity because it helps. The thinking is it helps to protect you if some of the stocks start to go south. So there have been some regulations, there have been some restrictions. You can be restricted as a trader while they investigate your account. The problem is, Keith, it seems as if some of these newer apps don't follow or have that minimum equity requirement. that really would probably be considered best practices.
Yep. And it's interesting, we don't apply that to gambling. Often, there are, if you go for casino credit, they're going to do run a credit score and stuff. But yeah, you can just walk into a casino and put down $1,000 bet. And if you've got the money, or if you've got a credit card, you're good to go. So, again, it's there's a differential set of regulations and restrictions around this. But, we talk about too, we talked about this in some of the early slides. There's a spectrum of risk. The types of trades you make or the types of investing you do, runs on this continuum as it does with gambling.
Yeah, as you look around the risk continuum here, we talk about from conservative to speculative. And again, and now this parallel slide kind of shows it a different way. The lowest risk equals the lowest potential return. In my days as a CFP, I was a certified financial planner. I was licensed across the board. And so I worked with clients on a regular basis. So I guess in my prior life, I was a counselor, but I was a financial counselor, if you will. So, when you're talking to someone who's retired or someone approaching retirement, the general rule of thumb is the younger you are, you can absorb more risk because you have more time till retirement. So if I'm 25 years old, just getting into the field, I might have 40 years until I retire. I can afford to have a riskier profile than someone who's now 65 or 70 entering retirement and they need stable income. Historically, the market has returned an average of roughly 8% per year over rolling 10-year periods. So after the 1929 stock market debacle and the crash, if you were to look historically, the market performs well over long periods of time, which is why you can't take a lot of risk if you're someone who's 70, 75, because you don't have the earning power that you had when you were 25. Right? It might be harder to get a job. There might be a fixed income. So we generally find those individuals stay on the left side of the chart, the lower risk. And that's from mutual funds, treasury bonds, and cash. Higher risk, higher return. And that's where we're starting to see the cryptocurrency, the commodities. And that's why it appeals. These meme stocks, meme currencies, they appeal to that younger demographic, that younger generation. But I think one of the concerns, and this is for James and Keith, is that the decisions being made by that younger demographic is also impacting the investments of the older demographic. So you're really throwing the entire continuum into a bit of a tizzy right now.
Yeah, looking at, there's actually some emerging, pardon me, some emerging data coming out of the UK. They've gone back, and that's kind of the nice thing about the blockchain technology and the fact that it is decentralized and so open. You can go back and examine some broader transaction trends. And looking at, it's interesting that the crypto is on the highest risk end of the spectrum, but also we know from some of the transactional data is that the gambling transactions with crypto are also on the higher end of the risk spectrum. There's a study done out of the UK, Schulten, Zindel, and Walker, looked at 2.2 million transactions, gambling transactions, over a span of about a year and a half, 583 days. They found that in any given 1 month period, there were an average of 644 bets over $100,000. So that is quite a few daily bets over $100,000. And we know that those types of wagers are taking place out of the crypto world as well. But even looking at some of the smaller bets, the average over this 583-day period, each user is placing an average of $660 in bets and wagers. So we know that, yes, we know that even on the low end of this transactional data, they are making larger, faster bets. And it's not so much that, kind of dragged out experience.
Yeah, absolutely. And so we still got 2 other sections to get through. So we'll try and skim through the rest of this, a little bit more quickly. But again, it's a perfect segue, James, into this. This is just a sort of a table to show exactly what James was just saying in terms of the frequency, that reinforcement just so quickly nowadays. So sorry.
Yeah, this has been, that Keith, just real quick on that one, that
Yeah.
has been just amazing when I think about these 6 areas, right? Traditional forms of gambling historically versus what has technology now allowed for. And whether it's gambling or not gambling doesn't matter, right? Fantasy, in play. I was thinking about that before we came on today, about how we shorten that reward schedule, right? We removed the time component, which is the protective factor, and we're now able to reinforce that activity and behavior so much faster across so many different things. Even Amazon, right? We used to have to send a self-addressed stamped envelope and wait 6 to 8 weeks. People
Yeah.
say, what the heck's a SACE? And now you get it in 2 days.
Yeah, I know. If it's not one-click ordering, I'm not interested. And one-click
Exactly.
ordering, Amazon Prime. It's sometimes it's like precognitive, like they deliver it before I even ordered it. They
That's
know.
true.
So so this is so any quick questions at the end of section 1? I mean, we kind of wanted to really emphasize the trading side, the crypto side of things, because I think that's where I hope that most of your questions, I mean, that's what's going to be the newest and freshest for you. If you do have any, let us know. We'll keep going. But and so in section 2, I wanted to let James take the lead, and really you covered some of the basics of cryptocurrency. Delve into this a little bit deeper, and we'll talk about some personal and first-person perspectives of, again, how people view these types of activities, and the kind of motivations and the damage it can do. But James, first, kind of help us level set around crypto.
Yeah, so cryptocurrency, I think the easiest way to talk about it is that it is a decentralized form of currency, and that's a very popular word that we're seeing more and more. It takes the banks and the large corporations out of the picture. As we talk about the meme investing, I kind of use the term meme culture, and inside of that culture is a high desire to not fund the large banks, to not fund
democratizing investing.
Yes.
We heard a lot at the Capitol Hill hearing.
Yes, and we see that in talking about decentralized casinos. I found a great article on decentralized casinos from there, and there are a lot of websites out there that are devoted to a certain type of cryptocurrency, but the picture they used at the top of their article were people smashing the Berlin Wall. And I think that's a great indicator of the type of mindset behind decentralizing things. So it's a decentralized form of currency using peer-to-peer networks to process transactions. And that means that basically instead of having Visa approve a transaction and then send the information to my bank that will bill me, and then to Target to say, yes, this transaction is approved. All of the transactions are being carried out basically by non-financial institutions, by originally individuals. The peer-to-peer network has become much larger. There are what we call Bitcoin farms now that consume, and this is another issue, just vast amounts of, and I would encourage you, Google image Bitcoin farm. It used to be that the average individual with a nice high-speed computer could process these transactions. And that's where the term Bitcoin mining came from. That if you complete that transaction, if your computer can, when one of these transactions is made, if your computer can complete that transaction and send the data back first, you are rewarded with a very small fractional amount of 1 Bitcoin. Basically, you have become, you've given your computing power to become Visa or Amex or USAA or whatever that financial institution is. The value of, as the value of Bitcoin has gone up, the value to process these transactions has increased. So it really has gone from something an individual can do to something that are literally taking warehouses full of networked computers to process these transactions.
And as you say, enormous amounts of power.
Yes, the drain on the ecological drain, the drain on resources for just the parts to make computers is unimaginable. So it's a decentralized. It has moved everything to the people, if you will. The problem is that, for the most part, and I know that in the grand scheme of things, the value of a dollar changes. The value of a, yen changes. There are the financial markets where the value of different currencies change. The rate at which they change is considerably slower than the rate at which cryptocurrency changes. And, for those of you that talk about gaming, we know that when I go into Candy Crush, I'm offered that 99-cent microtransaction, and I can get 7 gold bars and a sucker and 2 hearts and whatever great package they just happen to have on sale for me that day. I lose all realization of what $1 is, of what my 99 cents is. And as we buy cryptocurrency, we quickly lose that value of a dollar. There's some real cognitive distortion on what a dollar is at that point. So that lends itself, I think, a little bit to how easy it is to make these wagers, to gamble. If I bought in, a year ago, my dollar is worth considerably more than someone that bought in today. I made a $2 Bitcoin purchase last week as part of a conference, and it's now worth, yesterday it was worth $1.80. Today it's worth $2.45. Who knows what it was worth? $2.45 this morning. I could be broke right now and not know. So the rate at which it changes lends itself to a lot of cognitive distortion around the value of a dollar. Bitcoin is definitely the most popular cryptocurrency. There are right now, and in the slide I referenced 8,600. It has gone up. Right now there are 8,799 different types of cryptocurrency that are available to buy, sell, or trade. There are over 36,000 different online markets at which you can buy, sell, or trade these various cryptocurrencies. This is a little dated piece of information. Right now, the total market cap for all 8,799 cryptocurrencies is $1.7 trillion. Because of some of the economic relief things that are happening around COVID, there is the literal printing of money taking place right now. So there is a little bit more. There's around $2 trillion in paper currency, but we have nearly reached the total U.S. Currency circulation in value of cryptocurrency. So looking at how it's being used, there's a lot of, if you are on TikTok, and I'm just young enough that I'm able to figure out TikTok. I've never posted anything, so don't bother looking. But I do get on TikTok, Twitter, even Instagram. There's a crowd that has kind of left the Reddit sphere and moved over to some of these apps. You can search hashtag, BTC, ETH, the different abbreviations for types of crypto. And it's really being used as a way to gain social media traction. People are, and it's especially during the pandemic, during COVID, people are really trying to build a presence. They want to get sponsorship deals. There are sponsorships out there. One of the big ones is Coinbase. They are a platform, one of the platforms where you can buy, sell, and trade. They sponsor a ton of social media content. They sponsor YouTube video creators, which, again, working with youth, this was new to me a few years ago, making some introductions with a group of new kids that I was working with. And one of them told me that they wanted to be a YouTuber when they grew up. And I know what YouTube is, and I context clues told me that was someone that just made YouTube videos for a living. And that's very much a thing that young people aspire to now, is that they want to be a professional YouTuber. So there are in the gambling world or in the world of crypto, basically these sponsorship opportunities. So to be sponsored by, to be able to make content sponsored by Coinbase is, it's like we saw a few years ago where the young man won several $1 million playing Fortnite. That kind of greenlit the idea that, hey, this is a feasible, I might not be the basketball player, I might not be the baseball player, but I can be the crypto guy.
Right. It's a funny parallel. It used to be, well, I can't be Michael Jordan, but I can play Michael Jordan in poker and I can beat him there at the poker table. And then you had Chris Moneymaker being, the perfect last name. And now you've got the Fortnite kid, and next you're going to have the Dogecoin kid, but it's just, it's that sort of proof of concept. Anybody can do it, It's fascinating to watch. But the intervals between these things are getting shorter and shorter, right? It took a while to get from, I can't be Michael Jordan, but I can beat him at poker, to then Rounders and Chris Moneymaker, to now, who knows what's it's going to be next week even. I mean, just boom, 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 boom.
Yeah, and I've got some slides coming up as we'll look at some of the more popular types of crypto. The value, they've all gone up, and we'll look at kind of a 1-year historical perspective.
I saw, wait.
I think they're more in the crypto and COVID section.
Okay, thanks, yeah. Do you want me to flip to that now, or you just want to?
We'll hit on those as we talk more about that COVID piece. But there's if you look at the top 3 most popular types of crypto, you see kind of a value level for every investor. The Bitcoin at the top, Ethereum, and Tether, Cardano, Polkadot. There are a few vying for that third spot. But there's, the $60,000 Bitcoin, there's the $1,500 Ethereum, and then there's the, $1.50 Polkadot. So there's a value for everyone. It's not, there's no high bar being set. There's no real barrier to entry. So Keith, if you wouldn't mind going back, I think, types of cryptocurrency. Again, we've kind of hit on the idea of a meme investment, kind of a joke or laughable investment. GameStop, Nokia, Blockbuster, AMC, stocks that you wouldn't expect to be popular. I think it's really important to look at Dogecoin. It's based on the meme of a dog. It's a Shiba Inu, which I did some research, and Shiba Inu adoptions are actually up. And I know correlation is not causation, but I believe that the rise in popularity of this Shiba Inu-based meme joke currency may have lent itself to just overall popularization of the dog. But it is a joke investment. The person that created the code around this coin said it took me 3 hours. It was a joke. He has no, there was no thought whatsoever that this would become a real thing that people bought. It has been picked up by Elon Musk, who is kind of the, as we talk about this meme culture, he's kind of their CEO, if you will. He's driving a lot of speculation around crypto. He is encouraging the people that are currently holding Dogecoin to sell it to stimulate the market. He is really driving this. It started as it was originally worth fractions of a cent, about 1/10 of 1 cent, which doesn't sound like a lot. It's if you buy one, but if you buy 100,000 Dogecoins, it of course adds up. So the idea they're driving to get it to $1 in value. It hasn't yet broke 10 cents. Last week it did max out. It hit the most, the highest value that it's ever hit, which I believe was about 8.5 cents, which was overall 1,000% increase. So we know that if I buy 1 or 2, I'm not even spending a penny. But 1,000% increase over 6 months maybe I'm going to invest $1,000. Maybe I'm going to invest $5,000, $10,000, because we know that it's only going to get more popular. It's a sure thing, right? If Elon Musk is talking about it.
That's right.
Well,
it reminds me of kind of penny stocks and the pink sheet stuff, Dan.
Yeah.
That was traditionally seen as ultra risky on Wall Street,
Yeah.
and again that market manipulation, which was talked about a lot at Capitol Hill. How what is the line between an Elon Musk saying I want everybody to buy this, I'm trying to drive up the value, and could he do the same thing with Tesla stock? And maybe not. It's fascinating to see the differences.
I wrestle with this. Go ahead, James.
No, I was just going to say quickly, looking at, there's a great website called CoinMarketCap. Dogecoin is rated as the 15th most popular cryptocurrency right now. Current market cap, so meaning the value of all Dogecoins currently held, and they're at 5.6 cents per coin, $7.3 billion worth of this.
Theoretically, yeah.
Yes.
Yeah.
And the amount traded in the last 24 hours, $1.7 billion worth, or 31 billion individual Dogecoins have been bought, sold, or traded in the last 24 hours. So if we're being a literal joke, it is a $7 billion joke, waiting to pop.
And that's what makes it interesting, right? I mean, you think about the old style mentality, and I'm going to fall into this trap of research, fundamentals, the principle of utility, right? What good does this particular object or product serve in the sense of how can it provide utility back to the person who invests? And so you wonder about that. You wonder about the loosely regulated areas, but also the research and the fast changing nature. If you have someone who's interested, like listening today, who wants to get into this world and kind of dabble in it, James, they better be ready for a roller coaster. They better hold on tight. They better have that bag right next to them if they can't stomach the risk, because this is a roller coaster, right? I always think about anything worth building should be built upon a strong foundation. And I think about how fast things are rolling out because of technology and innovation. Have we really done the research? Do we really fully understand all of the risks? Not to say it's wrong. I'm not saying that, but it's so new. If you're someone who's not ready for that, that's why this is at the higher end of the risk spectrum, if you will.
Yeah, I'm not anti-crypto. I'm not. I have a neutral stance on gambling. I have a neutral stance on crypto. But it is, I think that quote from Warren Buffett, it's probably my favorite quote about crypto, is that if you don't understand it, you get much more excited than if you understand it. There was a 2018 interview he did on CNBC. And I think that's just it. People look at it, at almost all form of crypto right now, as being able to buy Microsoft stock in the early 80s. We have only seen it go up. There haven't been a lot of downward market fluctuations. And I could be wrong, and this could be the only type of investment to never have a downward day in the market. However, again, I know correlation is not causation. It seems unlikely. There have been some sizable fluctuations from which things have quickly rebounded, but I think we would be naive to think that there's no downward existing trend in crypto.
Yeah. Or like Mt. Gox, one of the big early things that went down, that affected the value, but it eventually went back up.
If we look at the 1999 real quick before the tech sector crashed, right? We had a gentleman in the chat even talked about this. His father was a PhD in economics from Yale, and he invested in 99 before the tech sector crashed. At that time, looking backwards, I remember watching CNBC every day, and they said that the tech stocks are all just going to go up. I mean, there's nothing stopping, right? Quote unquote, nothing stopping the technology move. And they were bidding companies up based on future value, earnings that we were expecting earnings 5 years from now, right? So they started having these inflated values, And then we know what happened. We had the market crash and people lost their shirts because they were buying on margin and they were borrowing money to buy more tech stocks because it was seen as it would never go down.
Sorry, James just said you're still waiting for your pets.com stock to
Yeah.
bounce back. You're a buy and hold. You're a long-term investor. You're
Time in hands, Keith. Time in
that's
hands.
right. You're holding out. And Maureen had a question. So as we transition to the next section, Maureen had a good question about Mark Cuban, and that he notably is one of the folks who's really been, kind of on the bleeding edge of this. He's going to accept Dogecoin as a form of payment. You can use it, I guess, at current value to buy some Mavs season tickets. Her question was, though, how does this impact sports and ultimately sports betting? And James, you talked about it. There are crypto casinos out there now. You sort of gamble on the thing that then you're gambling on in the casino, because your crypto might go down, it might go up. But, just as crypto gets more social currency, if you will, if people like Mark Cuban do it, if you can use it for more things, what does that mean for sports and sports betting?
Well, we already know that about 50% of all Bitcoin transactions are gambling related transactions.
50%.
Yeah,
That's really, yeah.
Wow.
So, I think when we see things like what Mark Cuban is doing, this is an investment strategy for him. Bitcoin, a lot of people feel like the window is kind of closed on Bitcoin. So people are investing in these smaller, lesser known types of cryptocurrency, hoping that they're in at kind of at the ground level, which is what he's doing with Dogecoin. Keith sent me an interesting article that I had kind of been following. It's been in the periphery for years, is that Atari is launching a decentralized casino. And they're backing Ethereum as their type of cryptocurrency. Which has always been firmly in that number 2 spot behind Bitcoin. One Ethereum coin is worth about $1,700 right now. About $250 billion in circulation. Really firmly in that number 2 spot. And Atari, I think, is trying to drive that up. What I think is incredible, though, is that Atari is promoting this as their decentralized casino. And just last week, they inked a deal to open physical casinos in, I think, Dubai, Gibraltar, and possibly a third location. So they're really riding and marketing this decentralized, we're not, this huge conglomerate, we're not, I won't name by name any gaming company that, we're trying to take down. But at the same time, on the back end, they are partnering with these giant gaming companies and, property management companies. So it's a very, very interesting time, but I think we'll see more people jump on these alternate currencies.
Yeah, it's fascinating. So, obviously, there's not just Warren Buffett, but many other, our friend Gordon Gekko, greed is good, perspectives on, and this is not crypto specifically, but just generally about the stock market. Dan, you kind of pulled these together.
Yeah, and I love how Warren Buffett is seen as someone who's been around forever, but he has his fingers in so many different things. And it kind of piggybacks on James' quote from Warren in 2018. And I like that one. The light can go at any time from green to red without pausing at yellow. That just speaks to the speed of the markets, whether they're the crypto markets, the traditional stock markets, whatever it might be. We have our quote from Gordon Gekko, the mother of all evil is speculation. And then Peter Lynch. Peter Lynch ran the Fidelity Magellan Fund, which is one of the largest, most successful mutual funds for Fidelity Investments. But he accurately notes that investing is fun and exciting, right? Because again, investing, buy what you know, buy what you use. But it's dangerous if you don't do the work. Behind every stock is a company. Find out what it's doing. That speaks to the research component, right? Because that helps someone understand, like, okay, let me do the research. Like, why do you buy a stock? I have a stash account. And so with my son, my 15-year-old son, he loves wearing Nikes. He loves getting his coffee at Starbucks. They use Amazon like every other American, it seems. So we bought fractional shares in our stash account, and it shows him some ownership. And I teach him that if there's no fundamental change in the business, then you hold the stock. If they shift product lines and now Nike no longer makes sneakers, but they start making hamburgers, well, maybe we sell the stock because that's not the reason we bought it for. And that's how I teach my kids and how I talk about investing versus day trading and speculating. I'm not speculating with Nike. I know what they do and I buy because I believe in their product. And there's that fundamental research and difference.
Yep. It's a lot different than fundamentally knowing that the shoe is low, so it's a good time to increase your bets at the blackjack table.
Right.
We'd put together, so we're going to have to skim these very briefly, just in terms of time, but we'd put together just a couple. Again, facts and figures are important, but the stories, the perspectives are helpful. And again, going back a little bit, and a lot of this data is from New Jersey, just going back and looking at the types of people who called their helpline with what were essentially gambling problems related to their trading. So Dan, if you just want to hit these real quick.
Yeah, really quickly, I'll go through.
It's important.
Yeah, and this goes back to what we were kind of highlighted in the chat, even with Dr. Custer. He was even looking at this early on, and as we go back to the 1999-2000 when the market did crash, it's either just 3 excerpts of individuals who called, whether it's a good salary, they had debts for more than $100,000 in Fred's case, had another individual who was married and, it was a day trader, also gambled on horses, played the lottery, right? Was betting on sports illegally with the individual down the street corner. So you start seeing the connection between people calling for help on a gambling related issue as a function of, hey, I just lost a lot of money in the stock market and I'm still gambling. Maybe the gambling can bail me out of this, or the stock market trading can bail me out of a bad gambling weekend. And we don't know. Again, it's not causation, but it's connection and correlation.
Yeah. There was a fascinating article that we all shared amongst ourselves. There was a new study out that showed that folks who were sports bettors and day traders tended to do more day trading on Mondays after they'd lost on their sports bets on the weekend. And so, but they didn't do the reverse. If they had won their sports bets on the weekend, they didn't necessarily do more day trading on Mondays. And the thesis of the authors was that they were kind of using their day trading as a hedge for around their sports betting. That they knew there was a lot of volatility with their sports betting, but so they had their day trading, and if they lost, they would hedge against those losses by doing more day trading. It's a fascinating research, and there's more of that that's coming as more and more of this goes online, and there's these huge data sets, and we can really look at some of these kind of observational studies or correlational studies.
And these were 2 more stories, because let's also not forget that the family members are impacted when someone deals with addiction. It's a family disease. And, we had a woman call whose husband, 52-year-old, had depleted their financial portfolio. He lost nearly $5 million in 3 years playing the options market. We didn't really talk a lot about options transactions today. Options giving you the right to purchase stocks or sell a stock at a particular time in a particular fashion, a very volatile, risky investment potentially. Depends on the type of option and how you transact it. So it's just an example that people call with gambling issues, but also with issues related to their stock market or day trading behaviors. And then when you probe a little further, you find out that the individual who was day trading also tended to be a gambler. And, we start looking at some of those connections between certain personality traits that were earlier about risk-taking personality, sensation-seeking. There's certainly certain personality characteristics, not to mention that, oftentimes someone who's very successful or driven in a particular job or field, they don't like to lose. Yeah. And they're going to see something to completion, and they will ride a market down to the bitter end, and they can lose their shirt.
Well, it's fascinating. I was just doing a mental exercise, and I want to do this with everyone else on our webinar today. If you were asked, if your medical practitioner gave you a screen and said, "I want to talk about risk-taking or co-occurring behaviors," and they said, "Do you drink? Do you smoke? Do you gamble? And then, do you trade?" Would there, in my own mind, I thought, if someone asked me, if I hold a mutual fund, does that mean I'm a trader? Is that potentially a co-occurring disorder? But in some ways, it may be not a co-occurring disorder, but co-occurring risky behavior. Maybe we should be asking about that. But I think that would blow people's minds to classify, alcohol, I get drugs, yes, because even a lot of people don't even want to put gambling in that category with alcohol and drugs. But as we broaden as we look at this on a continuum and just kind of broaden this understanding horizon, maybe that is a potential co-occurring disorder. Do you have a trading disorder? It'll be interesting to think about, along with a gaming disorder, small g, the kind of video game, the sort of addictive use of games. It's definitionally it's going to get very interesting. But what do people think about that? Do you see this? Let's see. Maureen asked about neurobiology. So that's a good question.
Did something.
Yeah.
I think the NCBI did a study, and I can go back and find that, Maureen. I think the NCBI did a study on day trading and gambling. I don't know the essentially if it was neurobiology.
Nope. James already got it. Yeah.
Yeah.
Yeah. We were looking at that. I mean, I think again, there's fundamental similarities. All right, so we've got about half an hour left, and so we're at our last section. I mean, we appreciate all the comments and comments and questions. Keep them coming. We'll keep rolling, but we hope this has been helpful. And again, this is such a fast-moving area. I think James and Dan have done a really good job at digging in, but not getting too deep in the details, because you can go down that rabbit hole with some of this stuff, and I don't know where it possibly ends. But so we'll keep going. This is the chart that James had mentioned before briefly, and I wanted him to talk a little bit more about this, because right now I think, especially among youth, there is this perception that it is always going up, and whether or not that is a classic bubble, or whether technology, society, culture, whatever it is, means that this time may be different. I think we kind of often tell ourselves that there's all these reasons why this time is not going to be like the last bubble or the last crash, but maybe not, because when you look at this chart, it seems pretty compelling. It looks like the stock chart that you always get when you first open up your mutual fund, that eventually buy and hold is that's always going to go up. Anyway, so James, talk about and this is specifically Bitcoin, but I think it's probably broadly representative of the sector.
Yeah, we've got, and I think I've got some two others behind this.
Yeah.
So looking at, as we were putting our slide deck together, we were kind of precisely at that 1 year mark, that we had been under quarantine, whatever the collective term we want to use is. And we see that looking at a year ago prior to that, the value of one Bitcoin was about $8,300. As it sits today, right now, it's at $56,100 or so. So it has gone up. This has become a more popular trend. This is that the one that's kind of firmly in that number 2 spot. Ethereum rose pretty greatly, $206 to, as it sits right now, $1,770. And then I think I've got Cardano behind that, which usually that's a very popular coin, much lower in value. You see 4 cents to, as it sits right now, $1.02. But what all three show is that, one, they've become more popular over the last year. If we look at the market cap, and I didn't want to have 50 slides of charts because nobody likes that. But as we look at the market cap and the 24-hour volume for all of these, they've gone up exponentially. So we know that the amount of them that exist or that are being held has gone up over the last year, just as drastically as the value has. We know that the amount of the 24-hour volume, the amount bought, sold, or traded in any given 24-hour period has gone up. But what I think is interesting is that the higher it goes, for about the first 6 or 7 months, consistently flat, slow rise. But as the value increases, we see the ups and downs, especially with Bitcoin, the more drastic ups and downs. Bitcoin is down $6,000 today. So as we look at, as we look at these becoming more popular, the average person is willing to take a risk. but I think most people are risk averse to a $6,000 daily per unit fluctuation.
Yeah.
Which can be, for someone that may only have a few $1,000s to invest or a few $100s to invest. Again, I use the term invest loosely. The fluctuations are becoming greater. The kind of the bubble on Bitcoin is that the person that created the currency holds most of the currency. The person that created the currency is unknown. No one knows who exactly that is. But if he were to ever cash out, one, he would be the richest person on earth. But also, it would totally destroy everything. If he were to sell, I liken it to kind of the gold asteroid. If a giant asteroid made of gold crashes into Earth, and we have so much more gold now, gold is essentially valueless to us. So if the person that is holding the majority of Bitcoin releases that and sells that, there's so much more in the market is flooded, Bitcoin becomes virtually valueless as well. It's a scarcity,
So if anybody on this webinar meets someone by the name of Satoshi Nakamoto, let us know. We would very much like to talk to this person.
Yeah,
James, I have a question.
Yeah.
I always think about the digital world and valuation, and I don't know if this spurs a question or a conversation. Typically, we think about supply and demand. Fundamental economics is there is a certain amount of supply available, and then there's demand. And when demand exceeds supply, price goes up, right? If 100 people want something for which there's only 5, price is going to go up until you hit that point of intersection where you're down to 5 people that want it and they buy it. And similarly, if there's too much supply and there's not enough demand, price drops, okay? In the world of digital, and whether it's these digital goods we talk about, whether it's skins in video games, whether it's cryptocurrency where you can mine and continue to find these other forms of currency, what is the economics of cryptocurrency using the traditional supply demand?
Well, there are about 8,800 different types of cryptocurrency, so there are about 8,800 different sets of rules for supply and demand. Looking at Bitcoin as kind of the predominant, the standard. So right now, I can tell you that in existence, there are 18,654,750 Bitcoins. That is a finite number. We know how many exist. We know how many are out there. I can tell you that in total, there will only be 21 million Bitcoins ever. That is it. So the way it works, we talked about that Bitcoin mining. That's how they're released. So as you process these transactions as part of the peer-to-peer network, you're awarded at this point, a very small portion of a Bitcoin. If you were part of this peer-to-peer network a few years ago, and you completed a transaction, you would have gotten a much larger piece of Bitcoin. So every 4 years, the amount that a person receives for processing a transaction is cut in half. There's actually, if you follow Bitcoin, every 4 years when it halves, there are large parties. They call it the halvening. It's quite an event in the cryptocurrency world. So that's why, the need to process more transactions is greater. But as that supply dwindles, we've seen the price go up over time as the supply and the amount being released goes down. I think, in the next 10 years, and forgive me, I don't have it exactly right in front of me. In the next 10 to 15 years, 98% of all Bitcoins, 98% of that 21 million will be released into the wild. No one on this webinar will be alive when that 21 million, because it keeps basically every 4 years hits a half-life. But what I think is interesting is that you're paid for processing these peer-to-peer transactions with fractional Bitcoins. That's how it's funded. That's what drives the peer-to-peer network. When these Bitcoins no longer exist in this reserve to be released for processing the transactions, they will implement fees, a fee structure, which in turn makes them exactly like Visa, MasterCard, financial institution. It makes them more or less exactly what they have established themselves to not be. So it's interesting. None of us will be around to see that, but there is a finite amount. I would, and I'll end on this. I would invite everybody to go to coinmarketcap.com. You can actually see there the circulating supply for everyone. So you see Ethereum has no circulating supply. There's no limit to the amount. But Bitcoin, Cardano, some of the more popular ones have a finite limit. And that scarcity definitely lends itself to value.
But it's just like, in some ways, nothing is ever really permanent. Satoshi Nakamoto could change his mind, or a government could change their central monetary policy, and either print more dollars in order to reduce reduce inflation. So these things are fixed, but even money itself is subject to the decisions or whims, if you will, of the central bank or of government. And so again, we're the fundamental rules around this are increasingly able to be changed and manipulated, and that creates uncertainty. It creates risk. I mean, it creates interest, but it's fascinating to see how and why these things can change. I mean, it's a lot. I mean, it's almost like the rules of blackjack. You can change the rules. I mean, you can say the dealer has to stand on this certain card, or you can't place this type of bet, or we're going to pay you out at a different rate. We know that you've been able to manipulate some of the rules around gambling, but with digital currency you can manipulate any of the rules, and that makes it I think quite interesting. But so the third section here, we wanted to focus on COVID, and I really appreciated James' slides, and I just want to bring those back up again, just to be clear. This is the value of Bitcoin and two other digital currencies during the pandemic. So this was March to March, where we were, and you saw not early pandemic, but late stage pandemic. They all rose, significantly, and and again, I'm not, correlation, causation, what caused those rises, I think is interesting, but clearly it's associated, at least, with activity during the pandemic.
Yeah, most of the rise, I shouldn't say most, but you can definitely tell when the stimulus checks, the first stimulus or economic relief payments came out.
Right.
And there's since been a Twitter account established that every day tweets the value of what if you had taken your first $1,200 stimulus check and spent $1,200 on Bitcoin, they tweet every day what that current value would be. They're reminding you how much money you could have made. And there's a big push. I have been watching the market cap this week, or the volume, the 24-hour volume, as people are starting to get their stimulus checks this week. I think the volume over these top-rated cryptos is going to go through the roof.
That seductive siren song, yeah, that Twitter account it's fascinating. So just to level set, everybody should know this. So I'm going to spend about 30 seconds on this. When we look at the impact of COVID on trading and crypto and gambling, of course, we know that there was already 6 million people with gambling problems who had risk. We know that social isolation, anxiety, stress, and depression are all associated with higher rates of gambling problems, that the problem gamblers have other problems, and that, of course, there's still a big barrier to services for people with gambling problems. We think it's pretty uncontroversial to state that problem gamblers likely have less capacity to or capital, if you will, social, health, financial recovery capital, that the pressures created by the pandemic may lead to more gambling and likely more trading and more participation in cryptocurrency to try and win that money back. Closures and quarantines have negative effects, of course, and that we're seeing the shifting in participation, the shifting in motivation, the shifting in consequences, I think, if you will. And while traditional gambling may have been closed. We certainly saw people, overall gambling participation and gambling revenues plummeted during the pandemic, but overall, and when you look at some sectors like sports and others, it declined, but obviously online gambling increased. It wasn't enough to mitigate the overall decline, but we certainly saw shifts rather than just straight drops. And again, so we know a lot about the gambling side. We know a lot about the trading side too. And I think there's a couple of points of evidence, if you will, to show that there's probably been parallel or these same shifts in the trading side as well.
Yeah, and that's what, when you look back at the pandemic and look at even from a stock market day trading perspective, Fortune magazine's article in December that showed that 20% of U.S. stock orders were day trading, and that was up 5 percentage points, right? So it was a 15%, and then during the pandemic it went up to 20%, which is a 33% increase. So more people either at home or with more time, looking for that rush, looking for something to do. And let's not forget that for some of these topics that we're talking about, it's new, it's exciting. Yeah, I think about it like a relationship sometimes. It's new, it's exciting, it makes you feel good. It's something that when my job is in jeopardy, I'm having a hard time paying the bills, let me do this thing that helps me to escape the world, right? I'm not sure how these things are going to play out. They're a little bit out of my control. So let me escape. And at the same time, let me also get some action and stay kind of, fueled up, because it makes me feel good when I see an upward sloping trend to the right and I'm making money. So it's really interesting.
Especially if you can keep dreaming into the future. If Bitcoin did this in the past year, what'll it do in the next month, the next Elon Musk tweet, the next,
right.
Mark Cuban, on venture. It's you can get a lot of that, that jackpot style dreaming.
And Dr. Rugel, she even said, gambling is that thing. Gambling has the power to change your life in a second. And we look at the speed and the rate at which these investments, these cryptocurrencies, these stocks move, right? When there's fuel behind it, it moves so fast that at times they'll halt trading because things are coming in so fast. It has the power, though, to change. It's that what if scenario. It's that dollar in a dream. It's, maybe take me out of my current situation. A lot of times, during the pandemic, people found themselves in a negative state, right? They just didn't want to stay in that negative state. So they don't know what state they want to be in. They just know they don't want to be here. So negatively, how do I get myself out of a negative state? And I don't mean New Jersey, because that could be a negative state of mind.
So my wife's from Jersey, so it's all right.
Yeah, that's right. We've talked about that. And even DC, right? A negative area, right?
Oh, so yeah, don't get us started. Yeah.
Right. So a negative mental state, but we don't know what state we want to end up in. We just know we don't want to stay depressed, watching news, scared of pandemic, right? I want to shift my focus. And so there's so much pulling at our attention technology-wise. And that's why you do see more people with new accounts, right? Interactive Brokers had more than 1 million accounts at the end of November 2020, a 52% increase from the previous year. And there was more trading volume. So people were taking, and one thing I will add to James's point, when we look at the prices of some of these cryptocurrencies and some of these stocks, I think about the value of a dollar often, because I think about how kids learn from video games. You play Grand Theft Auto, and they allow you to start your criminal empire, as it's marketed, with $1 million. And so now kids are sitting gambling on a game $50,000 a hand, not really fully understanding what 50,000 virtual fake currency is.
Yep.
And that's the hard part about digital is it's not tangible. We don't really know what it feels like in our hands. And that's an area of concern.
Oh yeah, I get the email every day from My Vegas, a social casino, an offer for 3,700,000 chips. But that's not really that helpful when the minimum bet is 1 million chips.
Right.
The value of the chip could be anything, and it's
You're normalizing it,
James. Yeah,
maybe not shockingly, talking about some of the vendors that accept crypto. Big Fish Casino has accepted cryptocurrency for quite a while. So again, just translating that value of a dollar through multiple outlets by the time it comes, to spend. you have no idea what you're actually spending.
That's right. Well, and value as well. You know, I mean, there's the value kind of tied to money and what can it buy, but there's also that psychological value that we talked a lot. You know, that I'm helping support this new democratized form of investing in finance that's going to revolutionize the world. You know, so I'm really emotionally attached to this, or to this reward, to this skin, to this being on the leaderboard. You know, there's lots of ways now that we can assign, or that people assign or assess value, and at the same time it seems ever more ephemeral, because you know what's here today is gone tomorrow. You know, and I think it's challenging. It's challenging both ways to think about value. You know, it's no longer just, you know, traditional definitions of gambling center very much on receiving a tangible, almost like cash money prize. You know, and if you don't get a cash money prize, then it may not meet one of those tests for gambling. But we know that it's that all sorts of digital rewards, or all sorts of rewards, are very salient for people, and not all of them are tied to money, or tied to money in a way that we traditionally recognize, in the way that gambling law and investing law traditionally recognizes. And I think that's going to pose challenges for the way we address this. If our clients, if our friends, if our colleagues, our family are all seeing value in something that may not legally be gambling, but it is absolutely valuable for that person. Yeah, as Maureen reminds us, so we're wrapping up now. Activity break in 5 minutes. I know we can all use a stretch and probably a coffee. So we did want to leave you with some next steps. You know, I mean, I think we all thought this was a really interesting presentation. We wanted to thank Evergreen for putting it on, because I do think if you're working in this area of gambling, gaming, you know, counseling, you may well have already seen clients whose problematic activity expands or includes traditional forms of trading and investing, non-traditional forms of trading and investing, you know, and that mix in between. So it's really important to recognize from clinical perspectives, from policy perspectives. And I learned, you know, Maureen and I, we've been around the field for 20 plus years. In preparing for this, and even today, I've learned a lot about some of these areas that are so fast moving, that are not traditionally related to gambling, but are absolutely related to gambling. You know, and so it really does help to have that, to be aware, and to have that conversation. You know, I know that I don't think about trading in the same way as I do as gambling, although day trading I think is pretty much an overlap. But you know, we need to expand our vocabulary, our knowledge, and it's really helpful to do so. And then of course, you know, it's a great reminder to take action. That there are resources available, and trying to make sure that there are resources available, you know, across that spectrum of prevention, education, treatment, and recovery. You know, because these things aren't, they may be siloed in some areas, but they are on a continuum in others. And someone with a massive, if there's a client, for example, who's in your practice for gambling, and you're not asking them about their participation in social, casino, or day trading, or cryptocurrency, you may be missing a big trigger. You know, you may be missing the source of a big problem. But so with that, let me you know, last comments and questions. James, if you'd like to start us off.
Yeah,
wrap us up, I should say.
First of all, super excited for the invite. So Maureen, thank you for that. You know, as a preventionist, my biggest piece is always my fear that I will talk to a young person and I will not know what they're talking about. I don't have to have all the answers, but I feel like, you know, in the decade that I've been working in prevention, is that I should at least be aware of what's out there. And I'll share a YouTube resource in the chat. I do want to preface this with, this young woman is sponsored by Coinbase. She does a lot of speculation, but she is on top of staying informed. She has a great video on the NFTs. Anytime there's a new trend or something in the crypto world that I feel like I need to learn, I check out her YouTube channel. So certainly with that preface that it is she is offering some financial advice, I will say, on how to invest and spend cryptocurrency. Take that out of it, and there's a good educational piece there. So I've shared that in the chat. I think, if you have clients that are talking about and referencing these things, it would be a great resource. So
yeah, that's it. I mean, I feel like I've got imposter syndrome all the time. Like, but yeah, you don't have to be an expert, but you should at least know. Like you said, having that sense of, from at least even from the context of what folks are talking about. So Danny, take us home.
Yeah, this is such a phenomenal area. I want to thank Maureen and Kathy. It's been great working with you, and also with Keith and James on this, because it is an emerging trend, and it's something that needs to be paid attention to. We don't have to become experts in this. We just want to become in tune enough to ask questions, that if there's someone dealing or doing an activity that's creating problems in their life, or could potentially create problems in their life, we want to know who to refer them to, right? And, when we talk about day trading, we think about the 12-step rooms that say, hey, listen, if you're a gambler in recovery, you shouldn't be day trading, right? You got to be careful of the stock market, because they recognize that there's certain behaviors that can be connected. And it's the connected behaviors we have to be careful of. And I was reminded, as we were getting ready for today in closing, of my mentor who really helped get me started in this field, was Jeff Beck. Yeah. And Jeff Beck passed away 3 years ago, March 10th. It's been 3 years, and I often wonder, what would Jeff's thoughts be on this? Because he could read so much information and absorb it so easily and give it back to you. And just the way his brain worked and would think, I was thinking about him a lot this week, just wondering what would be his view of the day trading and the cryptocurrency, so I've been thinking about Jeff. Jeff was a great mentor, but I'm glad we could all come together. Maureen, thank you so much. And Keith, moderating and working with you always is a pleasure.
Absolutely. Thanks. Thank you, Maureen.
Absolutely. Thank you, Keith. Thank you, Dan. Thank you, James. I have a feeling you three are going to be asked to speak on this topic all across the country in the future. And we will certainly want to have you back again, because as you said, things will be changed by the end of today. Things will be added to this that you would want to say, gosh, I wish I could have included that today. So we appreciate it. We have a lot of requests for more information on these topics, and really appreciate all the time and effort that you put into making sure you were sharing the most up-to-date information. Jeff would be proud of you, Dan. Really excited that you brought him up, and we look forward to seeing you guys in the future. James already did this, but my last thing I was going to say, Dan, Keith, if you want to put your contact information in, if anybody wants to reach you. Otherwise, you can always contact us, and we'll put you in touch with any of our presenters as well.